At 6:49 inches the morning on Monday, March 23rd, something unusual happened in the oil futures market. Contracts corresponding to at least 6 million barrels of Brent and West Texas Intermediate were sold in the 2 minutes from 6:49 a.m. in New York. The average for the same time period over the previous 5 trading days was about 700 lots, or 700,000 barrels. That is roughly 9 times normal volume. In a 2-minute window, before the U.S. market opened, before any news had broken, before any announcement had been made, roughly 15 minutes later, at 7:05 a.m., Trump posted a market-moving announcement about Iran on Truth Social. "The motley fool," he said, "the U.S. and Iran had held very good and productive conversations toward a complete and total resolution of hostilities." He ordered the Pentagon to pause all strikes on Iranian energy infrastructure for 5 days. In the time it takes to walk from your car to your desk, Trump added $1.7 trillion to stocks and pushed the price of oil down by $17, or approximately 15%, U.S. Banked by some estimates, the oil position alone could have generated over $100 million in profits within 20 minutes, with equity gains pushing the total significantly higher. And then Iran said it never happened. Iran's parliament speaker denied that any negotiations with Washington had taken place, calling Trump's claim fake news used to manipulate financial and oil markets. Half the gains evaporated. And the post itself was briefly withdrawn, apparently because of a typo, then reposted with a correction. A typo in a post that moved $2 trillion in global markets, which somehow made it into the final draft anyway. This is the average Monday morning in the 4th week of a war. But the Monday morning volatility is not the story. The story is the pattern. And to understand the pattern, you need to understand what Wall Street has been calling taco for the last year. Taco Trump always chickens out became the defining trade of last year's tariff wars, coined to describe the pattern Trump consistently exhibited: escalate, terrify, then reverse course and claim victory. U.S. Bank here is how it worked with tariffs. Trump announces sweeping tariffs. Markets crater. Everyone panics. Trump posts a softening, a pause, an exemption. Markets rocket back up. And the traders who bought the dip during the panic phase and sold into the relief rally made a fortune. Every single time. With almost mechanical predictability. And that playbook has now migrated from trade policy to active military conflict. Same escalate and de-escalate structure. Same Truth Social delivery mechanism. Same relief rally. And the same question that nobody wants to say out loud. Who was positioned ahead of the move? Which brings us back to 6:49 a.m. Nobel Prize-winning economist Paul Krugman wrote that the trading was especially bizarre because there were no major publicly available news items to drive sudden big market transactions. Krugman went further, arguing that insider trading on national security decisions is illegal, not just for unfairness reasons, but because it presents a strategic vulnerability. Trading on classified information effectively broadcasts government plans for foreign adversaries. He also raised an unsettling question: whether the possibility of insider profits may be influencing the policy decisions themselves. Are decisions about war and peace in part serving the cause of market manipulation rather than the national interest? He wrote, "The motley fool, that is a Nobel laureate using the word treason in public about trading activity surrounding a presidential social media post, and it generated less coverage than the post itself." One trader under the account name Magami Man made nearly $600,000 on the timing of U.S. and Israeli strikes on Iran on Polymarket. Another prediction market user has made $967,000, including many trades involving Iran, with a success rate of more than 93% on bets valued above $10,000, an unusually high win rate, 93% win rate, on geopolitical bets involving active U.S. military operations, at values above $10,000 per trade. Either someone has developed the most remarkable geopolitical intuition in the history of financial markets, or something else is happening. The Commodity Futures Trading Commission didn't immediately return a request for comment. The White House also didn't immediately return a request for comment. The motley fool, which is the kind of non-response that speaks volumes. Here is the mechanism that makes this bigger than just one suspicious Monday morning. When the President of the United States can move markets by posting on a platform he owns, and that post can add or erase $2 trillion in minutes, the information gap between knowing what the post will say and not knowing is the most valuable trading edge in the history of financial markets. It is not a sophisticated analytical edge. It is not superior research or better models. It is just knowing what the next post says before it gets posted. And the people around the most powerful man in the world are in an extraordinarily privileged position to have exactly that knowledge. Even with Monday's oil price declines, oil prices remain around a third higher than they were before the U.S. and Israel attacked Iran on February 28. U.S. gas prices rose for the 23rd straight day on Monday, reaching $3.96 a gallon, the highest since August 2022. The average price is up $1.02, or 34%. In the last month, a bigger one-month gain than after Hurricane Katrina or Russia's invasion of Ukraine. So here is where we actually are. 20% of global oil supply is effectively offline. Gas prices have surged 34% in a single month. Iran says negotiations are not happening. The 5-day pause Trump announced runs out this weekend, and the mechanism preventing a full market collapse is a series of Truth Social posts whose factual accuracy, the counterparty in the alleged negotiations, is actively disputing. The TACO playbook worked beautifully for tariffs, because tariffs are a toggle. Flip them on, flip them off, claim a win. But an active military conflict with a government whose domestic survival depends on not backing down to American ultimatums is a different kind of problem. You cannot post your way out of a geopolitical reality that does not care about your stock market. And here is the uncomfortable truth. The market is not pricing the Iran war. It is pricing Trump's mood. And Trump's mood changes at 5 inches the morning, in all caps on a platform he owns. That is not a market. That is a casino where certain people know the next spin before the wheel stops. And the retail investor who woke up Monday, saw the green numbers, felt relieved, and had no idea the move was already done before they checked their phone, that person is not a participant in this market. They are the audience. The CFTC has not commented. The SEC has not commented. The White House has not commented. And somewhere right now, at 6:49 inches the morning, someone is already positioned for the next post. Drop your take in the comments. Do you think the pre-announcement trading is explainable by algorithmic systems and coincidence? Or do you think $580 million in perfectly timed trades 15 minutes before a classified presidential decision is the kind of thing that deserves more than a no comment from the regulator responsible for investigating it? Because the answer to that question matters a lot more than which way the market opened on Monday.